Ladies and gentlemen, welcome to Creating Tailwinds Podcast by Flight Path Financial with your hosts, John Urbick and Jared Adams. Join us today as we discuss the power of infinite banking. And here we go.
Greetings, John. How are you, sir? Welcome back for another episode.
I'm doing great, Jared. How are you?
I'm doing fantastic. I think it's just like any pilot. I could complain, but nobody cares. Nobody wants to listen. I've always got something I could complain about.
Life's too short to complain, right? You
I
just
agree.
keep on motoring.
I
Keep
agree.
on motoring.
No, I'm doing really
gosh.
well. It's a really busy time between sports with the kiddos and going through some of the work stuff, getting checked out for it, and then keeping all the things IBC rolling in the right direction.
Yeah.
It's a busy time, but it's been really good.
Yeah, no, 100%. Totally hear you there.
I hear we can call you Tim the Toolman Taylor for all the work you're doing around your house. We'll call you John the Toolman Taylor.
Don't share that publicly. My wife found out I'm industrious and I can build anything, and I'm trying to hide from that reputation because my back's killing me. I moved a couple tons of rock today building a backyard patio deck. So these are huge rocks and stones going up to the back. It's going to be killer. We're going to have a party, Jared, when I'm all done with this thing.
I love it.
And I paid for the whole thing with my IBC contract. How about that?
Hey, how about that? What a perfect use of that. It's almost like you saw that coming. Like you saw that you might need the capital someday and you wanted to have control over it. Who would have thought?
You never know. And can't think of a better application of the infinite banking concept to home improvements, which can get pricey. I started with a small project and it bled into this much, much larger one. But, it's funny. We were talking the other day about loans. Funny, we should mention that. And everybody needs loans for something, whether it's from our friends or from a commercial establishment, and we make loans to ourselves and we don't even know it. Most people don't realize it because they're using cash or they're paying for something else. So maybe we could talk a little bit about the power of loans under a properly capitalized IBC concept structured life insurance contract. What do you think?
I love it. Maybe, before we get to that, maybe we just kind of touch on some of the common ways that folks can access capital that steers clear of that, right? Like if, some of the things that come to mind are like a 401k loan or credit cards or a HELOC or a personal loan. Again, all kinds of different options that are typically out there that the Bank of Main Street says this is where you should go. Don't have it, put it in a spot where you can access it. Let's put it at a spot where they make a lot of money at it.
Well, it's funny you mentioned those bank loans, personal loans, whether they're collateralized or not. Your HELOC, get a credit check with every single one of those, don't we? Yeah,
Sure do.
So that's something else that we can touch upon is the impact of credit checks, especially if you're doing those a lot. Those hard credit checks can ding your credit score, which then again is a tool of the bank to extract even more money from you because they assess that as an additional risk. Why? I don't know. I don't agree with it, but I don't make those rules. They have your money, and so they make the rules because they hold the gold.
Right. That's right. I know I mentioned this when we were talking earlier, and I won't mention the name of the radio show host in Atlanta who was basically scolding people on the radio that when they needed capital the most, whether it was a home repair or a medical expense, we're talking outside of $40-50, that they took the family to dinner or something, right? We're talking like major expense of something that popped up. And he was scolding people for accessing their 401k like a piggy bank. And he was scolding them for, the lost opportunity of the money that was not growing because they accessed that. If anybody knows any of the details about a 401k loan, one, it's limited at 50K, and two, that money that's out you're using, yes, you're going to pay yourself back, but you're not gaining you took that money out of a stock and used it. So the money that it would have made while in that stock is not being made. And that's the point he was trying to make. And he was
Right.
basically scolding people. And it was like, okay, like cool, like nice learning point. But then I was like, so what are you supposed to do? Like have things break less or don't have medical expenses? Like all of these things that just they're not even possible. It's like there was no conclusion other than he was scolding people for using your 401k for a loan. I was like, okay, cool, but what's your other option? Like, if you haven't thought about this, if you haven't thunk long term or put some other plan into place, that might be your only option. That may be the only cash that someone has to go access. And you're going to get scolded for it by some whatever. I'll stop my rambling.
Well, it's funny because you mentioned this person to me off air,
Uh,
and I have a funny story. I was deadheading on an airplane, and I met him, and I took the opportunity to offer my services to him as a financial planner. It's true story. True story. I said, I can help you. You're doing a
did
great
he take
job,
you
but
up
I
on
can
it?
help you. No, he just laughed, but I didn't expect him to, but I couldn't help myself. It was because
Yeah.
I felt like I knew something that he didn't. Anyway, but he's a very smart guy. But yeah, the 401k loan is a disaster in a lot of respects because, yeah, as you said, 50% or 50,000, which is ever less. And
Yes.
then there's all kinds of other restrictions with it. And the kicker, apart from the fact that you're not growing your investments that are in there that you can't touch until retirement anyway, which could be 30 years down the road for many people or longer, is you're double taxed. The
Yep.
money goes in tax free. It comes out tax free when you borrow it. You're paying an interest rate on it, but when you put it back, it's after tax dollars. And then when you ultimately take it out again, it's taxed again. So double taxation. Terrible idea. Terrible idea. But
Yeah.
what are our
And
options? What can we share with people, Jared?
in terms of options other than a 401k loan,
Yeah, or a HELOC, or some of these. There's we could go through each one of these, and
yeah,
without doing that, the most egregious one is going to be the 401k loan. The other ones have their drawbacks because a HELOC, they can foreclose on your property if you don't pay the thing back. If you're of a personal line or a business line of credit, you don't pay it back, then they can really mark up your interest rates. And there's an interesting website if anybody wants to check their own out it's called paidnice.com, paidnice.com, and you can go check the usury rates in every state across the country.
yep,
Georgia's usury limit rate is 16% for loans under 3 grand and 5% per month for loans over 3,000. Florida, I just checked Florida, legal max on loans above 500,000, big number, but it's 25%. But snapping
sure,
back to Georgia, 5% a month. You got a $100,000 loan out there, $5,000 a month in additional loan interest. That's on
sure,
top of your other interest. It's
yeah,
crazy. All that goes away when you borrow against your properly built infinite banking concepts structured life insurance contract through a collateralized lien against the cash value. So simple. So simple.
it is. It is so simple yet so much noise around that you shouldn't do it. That it's a horrible choice. Why would you do that? Why? And I one of the nuggets that I saw recently was never mix investment with insurance. And I think both you and I would agree. Don't do that.
100%.
Don't mix
100%.
investments with insurance. And that's why we would say if someone is trying to sell you an IUL, don't walk, run.
Yeah.
Run in the other direction. And this is not that. And so there's just so much noise of what's going on in that space. And we can't right all those wrongs, just you and I, but we can have conversations with people that can shed some light on what's available and a way that if they were going to save 5, 10, 20% of their take home pay anyways, why
Right.
not save it in a vehicle you have access to that provides a death benefit and you can use it and control where it goes and what it does. We were just talking about the 401k loan and how all the different things that come off of that. There's one other caveat that often gets overlooked on that one. If you borrow, just maybe you borrow 20 grand out of the 50 that's available, you don't get to take another loan until it's paid back. Maybe you need
Some
another
companies
20.
are like that.
Yeah, maybe you need another 20 grand the next week. And you've only paid back, I don't know, fill in the blank, a couple of grand on the 20 that you borrowed. You don't get to take another 20 grand, even though you have 50 you can loan up against. So it's like all of these barriers to your money. Like, why keep putting a wall up between the capital you've worked so hard to earn, create, all of these ways that it's your capital? You've earned it, you've built it, and you're just going to put a wall up between it? Like, there has to be a better way. And that's where you and I get to come in to talk about that, because there is a better way where you can have control and you can continue to, gain from the uninterrupted compound growth year over year over year. But you got to
You,
think outside the box, and you got to be willing to step away from the noise.
so true, Jared. So true. You talked about the HELOC as one of the examples,
Yep.
and say your home is worth $500,000, and you have $100,000 loan against it with a HELOC, for instance. Um, the bank controls your entire house once you take that loan, that until it's paid off. So whether it's 100,000 or your very last payment of $1,000, I don't know what it would be, whatever that last payment
Sure.
would be, until
Yep.
that last payment is made, they have 100% lien against your $500,000 house for what? $1,000. I
That's right.
don't like that. I don't like
Yep.
that at all. And if you have a life insurance contract, a whole life dividend paying life insurance contract, and you have $500,000 of cash value, and you borrow 100, and you pay back 50, well, your access to the capital is everything minus 50. It's still
That's
your
right.
contract. You control
That's
the
right.
thing, and you have 100% flexibility. So
That's right.
it's so important for people to understand. Not only is it a number that is yours on paper, can you get to it? Can you access it? And if you do access it, can a lending institution charge you egregious rates of interest if you're late, you can't make it, something bad in your life happens, and you can't make the payment? It's a non-issue with a
Yep.
life insurance contract, so long as you make the premium. Loans and premiums are two different things.
That's right.
So long as you make the premium, the insurance company has already run the calculations on what you can borrow against your cash values. You're good to go.
And there's a lot of, I guess, misunderstandings, or maybe just, you know, not truly understanding what's available. The day you start that contract, depending on how it's structured, there's a good chance you've got access to a great deal of the capital you started this IBC policy with. And that just grows from there, right? Like, the folks that are business owners really understand this, because they know what it looks like to take 3 to 5 to 7 years of just pouring capital into something before they really ever even see a gain from it. That's even better in this scenario. You don't have to wait 3, 5, 7 years from when
Right.
you first sign the dotted line on starting that whole life policy. There's a good chance you've got access to some of those living benefits within 2 weeks of starting that policy. So again, it's trying to understand what you are creating so that you know what you have access to as you save smart, and as you put funds away that you have access to, as you remove all of those barriers to your capital. You know, we I know we've glossed over it in the past, and we use the book Becoming Your Own Banker by R. Nelson Nash as a blueprint for how you would run IBC and how IBC can apply to your life. Yet all of the things are laid out in that book so easily. He talks about how you can take away all your barriers to your capital by setting up a properly structured dividend paying whole life contract.
Yeah. Yeah. It's such a simple process. It is a process. It's not a thing. It's a
Sure.
process of taking the banking function back in your life. And so think of it as a giant swimming pool of money, and there's a valve in the middle. And that valve, it can go in two different directions. It can go out to somebody else, or that valve can go through you and then beyond. You want your money to flow through your hands, and you have
That's
the
right.
ultimate say in what happens with the direction of that capital. When you're doing a HELOC loan or a home equity, home equity, or you're doing a loan from a commercial lender, you're out of the picture. You're just on the hook in case things go wrong. And it's not a great position to be in. You're not super capitalized and protected by your own hard work, which you've brought to the table. That
Yep.
capital you've given to somebody else and said, okay, you control it. Now, may I have some of it? And it comes with all kinds of strings and restrictions, especially when you're talking about qualified plans. I am
That's right.
not a fan of qualified plans.
Yep.
You know that, but,
Yep.
not to say you shouldn't do them, but, I have my reasons, and I could go into very, deep detail, as to
Yep.
why I don't think they're the best choice for most people.
Sure.
Most people
Yep.
who want, "Hey, I don't wanna think about this, I wanna just set and forget it." This is an awesome place to be because you're going to get the growth. You're backstopped by the life insurance contract. You've got access to the capital. You can save a boatload in interest that you're not going to pay to other people. And that's the differential between what you're paying on the contract versus what you're going to pay in the market. Now you're talking default, numbers get crazy big.
Yes.
So talk to Jared or talk to me about why, especially the business people out there. Most business people are doing nothing like this. This is one of the segment of our economy that is woefully underserved. If you're a businessman or a businesswoman out there, my goodness, we can help you, and you can put thousands of dollars back in your pocket. I can't say guaranteed, but
Sure.
I can't say it. But
That's right. That's right.
man, I'm
The
doing it.
question
Jared's doing it.
I would ask a business owner if I had a chance to sit down and chat with them would be, if you have an excellent year that you just absolutely crush it and you make 50% more than you were anticipating that you were going to make that year, what do you do with it? Does it
Right.
just sit in the banking, you Bank of Main Street, or a high yield savings, or does it just sit somewhere with no job? Like,
Right.
what do you do if you have a great year? And then in that same breath, I would ask the question of, what happens when you need access to capital because you had a not so great year, that you still have to make payroll and that you still have to buy supplies to make sure that your business continues to run? What type of small business loan, credit card debt, fill in the blank,
Yes.
giving up equity of your business so that someone would give you cash so that you can continue to keep the doors open. Those two extremes of how you deal with that really paint a picture for how successful your business will be over the course of 5 and 10 years and beyond. So those are just simple questions. That's not me telling you what to do. We're just asking a couple questions. We would
Yeah.
love to be able
Yeah.
to sit down and peel back the layers of where your specific situation is, to help understand how this could be a huge asset to your business.
There are people out there, Jared, and I think to someone you and I know at our other place of work, a tragic story. This guy, he was a pilot, had, I believe, 3 or 4 children. Young guy was killed in a small plane crash. He was a very talented pilot, but things happen, things go wrong, and he was killed. Too many pilots say, "Hey, I'm going to save it. I've got my, current income. I'm crushing it right now. I've got this to the moon trajectory with my earnings power, and I'll have plenty of money." You got to plan for the downside. I hope this individual had done that. I don't know his personal story, but I just know the tragedy behind it. These things happen. They happen every day, tragically, and it's not just pilots. It's doctors. It's lawyers. It's the finance people. Every walk of life. So if you're a
That's right.
high income earner, look at this stuff. Just do yourself a favor and take a look, because it truly, I've seen this so many times in my life where life insurance has saved people's families' financial lives.
And at the very least, maybe you read the book and this part doesn't quite make sense. At the very least, talk to someone that can get you a 10 to 15x annual income in convertible term, so that you can have the access at the very minimum to protect your family for what's there, and have the access to convert it later in years that you don't have to go through underwriting again and to go through the process. If you lock in that rate for 10, 15, 20 years, and you can convert that down the road, you have just opened up a whole swath of options you don't even know exist just by choosing to look beyond just your standard term and getting a convertible term. That one key word before it, the convertible term, is really, really important. If you
Yeah.
don't know what that is, maybe a chat GPT will at least get you started down that road,
Oh, don't
and
go
then call
there.
us
Go
up.
call Jared or call
That's
John.
right.
We
Call
can.
us up.
I, I love ChatGPT, but no,
I
but
know, right?
it's
Well,
just
one other thing you mentioned earlier that I didn't want to glaze over was the idea of how, we talked about the barriers to your own money. We talked about the credit check, and I wanted to just come back to that quickly to say, just a quick emphasis point on all of the different tools that the bank has to see or gauge what rate they're going to charge you. Because when we look at what a rate may charge for any kind of a loan
yeah,
or credit card or fill in the blank, there's going to be some rate that goes along with that. All of it is a range that is going to be controlled by the bank after they do a credit check and have a conversation with you. Why do you need this money? What are you going to do with it? Can you mother may I with your own money, right? And now, to contrast that against an IBC contract, you go onto your portal and say, I need cash from my cash value, and they send it to your checking account in 2 to 3 business days.
yeah,
No credit check. Now, that seems pretty easy to me. Like, if that's the way I access my capital, and they don't ask, what are you going to do with it? How are you going to spend it? Like, they view it as your money. And so you get access to your cash value. Again, I highlight the value. It's not your cash that's sitting in a bank. It's a cash value you have access to. They
that's
don't
right.
ask those questions. So
Well, no,
what
yeah, go
on
ahead.
all those other things we talked about with putting a wall up between you and your money, you don't have one in this setup.
Nelson used to emphasize the point you're making this way. He said, you have the first right of refusal with the life insurance company's money. Before they invest it anywhere, they pivot, they look at you and they say, Jared, John, do you want the money? No? Okay, we're going to go invest over here. You want the money? You've got first right of refusal on that capital.
That's right.
No one else does that. With the banks, lending institutions, you have last right of refusal. They
That's right.
decide, and if you check all their boxes and they still have capital because their numbers are good enough and their ratios are acceptable, and they're not good right now, I haven't been in a while, then they decide if they're going to give you the money after their review and your credit
That's
review and
right.
everything else.
That's right.
No, freedom. Freedom is about freedom, financial freedom, and control and access to your hard-earned money. You can do this. Piece of cake.
Yeah. I don't want to go down the political road, but I've said this before. I'll say it again. This is the most libertarian thing I've ever done. Taking control over the banking function, doing what Nelson said, go be great at your line of work
Yeah.
and being a banker. Like,
The funny thing is, it doesn't matter if you're a libertarian, a Republican, a Democrat, or a
that's
socialist.
fair.
You
That's
like
fair.
to have money in your pocket because you got to spend it on stuff.
Everybody's
And
going
if
to
you
spend it.
can't access capital, I don't care what your political persuasion is, you
That's
got a
fair.
problem.
That's
And
fair.
infinite banking solves this problem for every political persuasion. Call us. It's simple.
I'll leave with one little quick nugget here because I think there might be a naysayer that would hear what we've talked about with loans. And I'd
Yep.
like to leave us one little nugget that we pick up on in the next pod. And that nugget, it would say, well, I don't do loans. I pay cash for everything.
Yep.
And I think that could give us a good launching point for the next one.
Yep. Fair enough. Yep. You're giving up all the interest there, but to yourself. But another podcast. Great
I love it.
segue out.
Love it.
All right, Jared. Well, it's
Have a
wonderful
great
to
day,
see
John.
you.
Go ice your back and make sure you got that beautiful hot tub on the way.
Okay. All right. You take care, Jared. Great seeing you, my friend.
Great to see you. Have a great day, John. We'll talk to you soon.
Thank you. Bye-bye. We'd like to thank you for tuning in to today's episode of Creating Tailwinds podcast with your hosts, John and Jared. As always, we welcome your questions and critiques. You can reach us through the Contact Us tab at flightpathfinancial.com. Remember, it's all about how you think. As Nelson Nash has said about infinite banking, give it your close attention, and it can make a radical improvement in your financial future.